Hello and welcome to My Finance Teacher. It's a Saturday already and I hope you guys are having a nice weekend. Now in this video I want to have a look at several assets. That's US dollar, gold, crude oil and S&P 500. We're going to look at all of them in one video. And before we actually start the analysis, I want to remind you there is a like button under the video. And I guess it is easy enough for you guys to hit the like button. I would really appreciate it. And I would also appreciate if you share your opinion on any of these assets in the comments below. Now, starting with the US dollar, the daily DXY chart in front of you. As we see over the last couple of days, the US dollar is bouncing up from coming close to retesting this 200-day moving average. And I think this bounce up is going to continue at least for a week or slightly longer. It depends on the following. And what it depends on is whether dollar is bouncing out of its short-term or daily cycle, or dollar is bouncing out of its intermediate, relatively longer half-a-year cycle. This intermediate cycle has been going on since the end of September. That gives us so far only 4 months. It's not usually the case that intermediate cycles last for only 4 months, but it's a possibility. Usually they last for half a year. So there is a small possibility that we've seen an intermediate cycle low in the US dollar a couple of days ago when it reached 95 on DXY, when it nearly retested the 200-day moving average. In that case, if we are entering an advancing phase of a new half-a-year cycle in the US dollar, I think the rally in the US dollar is going to continue for quite a while, possibly going above this 50-day moving average over the next several weeks. But I don't think this is the most likely outcome. I think 4 months is a little bit too short for an intermediate cycle, and this bounce in the dollar is going to continue for a week or two, and after that we're going to see a continued weakness in the US dollar, prolonging this intermediate cycle by another month or a couple of months. In either case, in the very short term, I see US dollar strengthening a little bit. Now moving on to gold, this is a daily chart of gold futures in front of you. This strengthening US dollar over the next week or two will probably help dollar to make a decision over the last several days. As you see, there was some volatility near the top of this intermediate cycle in gold that started in mid-August. This gives us 5 months already within this intermediate cycle, and we are due to enter a declining phase of this cycle. With some volatility near the top, we are getting ready probably in gold to enter the declining phase of this cycle, and strength in dollar over the next couple of weeks might help gold to make this decision to turn back down, probably towards its 250-day moving averages, which are near each other at the moment. I guess over the next few weeks, probably a month or a couple of months, gold might actually retest the levels of 1260 sounds possible, as well as 1250, 1240. So anywhere between 1240 and 1260 is a possibility. Actually, I think I'm inclined into the range between 1240 and 1250 or so, because 1240 historically has been a relatively good support resistance zone. Over the last couple of years already, we see this support and resistance range retested several times. Plus 1250 is where this 200-day moving average is at the moment, so anywhere between 1240 and 1250 might be a target for gold to retest over the next several weeks. Plus, remember that near the end of this month, near the end of January, we're expecting a rate hike. So that might also help gold to weaken a little bit, and that might also help US dollar to gain some strength over the next couple of weeks. Now moving on to crude oil. Again, this is a daily chart of crude oil in front of you. Crude oil is retesting, is bumping into its 50-day moving average. That is often a support resistance zone for crude oil, and I think that over the next several days crude oil might take a bit of a breather from this rally we've seen recently since late December, especially as dollar is gaining some strength over the next several days. So over the very short term I see some weakness, not a very strong weakness, but a little bit of a weakness in crude oil. But in the medium term I expect crude oil to continue rising, because I think in the end of December we've seen an intermediate cycle low in crude oil, and since these cycles last for about half a year or so, I think we still have another couple of months of the advancing phase in this intermediate cycle for crude oil. And ultimately over the next couple of months this advancing phase in crude oil might take us back to this support resistance zone at about 60 to 65 US dollars. That's where the 200-day moving average is at the moment. Plus this level proved to be again support resistance zone historically over the last over a year. And finally, talking about S&P 500, S&P 500 is at the moment testing this support resistance zone again. Plus it's some sort of a round psychological number, very close to 2600 on S&P 500. We've seen this 2600 on S&P 500 tested once in the end of October, once again in the middle of December, before it was actually broken, and we're again retesting this support resistance zone at the moment from the underside of it. So over the next short term, let's say a week or a couple of weeks, probably not even a couple of weeks, maybe a week or so, I expect some weakness in S&P 500, probably due to dollar strength over the next couple of weeks, and also with this some sort of uncertainty about the Fed rate hike near the end of January. Plus again, as I said, we are currently at this resistance level and not far from 50-day moving average, which might also prove to be some sort of a resistance level that S&P 500 might temporarily struggle to overcome. So in the short term I expect some sort of a weakness, but again in the medium term, over the next 2 to 3 months, I expect some strength in S&P 500. Again, the reason for that is because I think at the end of December we have finally seen the intermediate cycle in S&P 500, which actually has been quite a prolonged cycle, and that means we're in an advancing phase of this cycle, which generally should last for 2 to 3 months at least. So over the next 2 to 3 months, I think S&P 500 should at least retest its 200-day moving average at about 2740, even if we are entering a longer-term bear market. If we're not, then S&P 500 might actually break above this 200-day moving average, and time will tell where it will take us. Lastly, on the personal note, in relation to gold, I've recently sold my GDX holdings with an extremely modest, very small profit, because again I was too early to enter into the positions, because the previous intermediate cycle was very long and the declining phase of that cycle was very long. I didn't expect it to be so long. So I have actually sold my GDX positions temporarily. In the longer term, I'm pretty bullish on gold, so I think over the next several weeks I'll gradually re-enter those GDX positions, hopefully at a slightly lower price range compared to where they are at the moment. In terms of crude oil, I'm still holding USO. I haven't sold, and I'm probably not going to sell USO, although I do expect some modest weakness over the next several days, maybe a week or so, because I think this intermediate cycle low at the end of December gives us a couple of months for some sort of a rally in crude oil. Same thing with S&P 500. I'm still holding triple Qs, but again, I was a little bit too early to enter the triple Qs because I actually thought intermediate cycle finished last time in the end of October at the current where S&P 500 is at the moment. So I'm actually sort of breaking even on QQQs at the moment, but I haven't sold it, although I do expect some modest losses over the next several days. Again, similar to crude oil, I think triple Qs are going to perform fine over the next several weeks rather than several days. So that is my view on gold, on crude oil and S&P 500. Remember guys, this is not an investment advice. This is for your sort of entertainment, for your education, for your information in general. We all have to make our own decisions when we make investments, and whatever is your decision, I welcome you to share your opinion in the comments below, as I mentioned, and subscribe to the channel if you haven't.